All right, we're live on YouTube now. Good evening, guys, and welcome to tonight's weekly analysis webinar. It's the Elliot Wave weekly analysis webinar on a Sunday tonight. Thank you all, guys, for coming. All right, so as always, we're going to be going through the markets. We're going to go through the charts for the week ahead, see what the setups we have and how we can profit in the market in the week ahead. Okay, so we're going to be going through a few charts. I'll go through as much as possible, but I'll try and focus on ones with most probable setups. So the aim is not the volumes, yeah. The aim is the quality of the setups that we're going to be looking at tonight. All right. So I hope everybody is good and set and ready to go. Okay. So as usual, we're going to start with the dollar index, but today I'm going to start it a bit differently. I'm going to start with a chart that I posted of the correlation between the US dollar, the Euro US dollar, and the dollar index. So let me try and find that chart so I can just put it up. Chart last week on TradingView. All right, so while we are about to start, you can follow me on TradingView. I'll put up my TradingView profile so you can check. Okay, so let me just find that correlation chart. All right, so that's the correlation chart. It will be loading, but in the meantime, so this is my profile on TradingView. So if you'd like, you can follow me on TradingView. So usually I will post the link of this video on TradingView after it is done. But otherwise, at any time, I will put up the link for the webinars here as well. Also, the link can be found on my free Telegram channel. Let's just get that Telegram channel so you can see it on there. Okay, I see that somebody who's typing something on there. Let me just see if what the issue is. All right, let's just see. All right, so let's just see. Okay, we are live on YouTube, so that's where let's ask relevant questions. Let's ask relevant questions, guys, on the chat box. All right, so any other questions? I don't want to waste time here addressing issues that I've got nothing to do with trading, so I'm not gonna. So if you're gonna ask any question, please let it have to do with trading. So it's a Sunday evening. We've got only an hour and a half for this webinar, so I don't want to waste time. So I want you to get the quality of the charts. So let's focus on the charts. I don't want to be preaching and doing all this sort of stuff. Let's focus on the charts. If you like my webinars, then keep watching. If you're profiting from it, then by all means, like the videos. Right. So let's do that. Let's focus on that. Right. Any other personal questions you can ask me on my email. So this is my TradingView profile. I also wanted to bring up my Telegram channel so you can see my free Telegram channel. Right. So this is my Telegram channel on there. All right. My free Telegram channel is this one over here. It's called Trading Waves. Right. So this is the link. If you can actually post this and see this link properly, you can type it up. I don't post much here. I post about 1 or 2 charts a week. Right. So most of the charts I post are on TradingView. But even so, those are only overview charts. So the group that I post everything, where I post all my charts, is this one, Pips Exclusive Trading Group. This is our live trading room where all the guys that I've subscribed, that have completed my course, are in. So the guys that have completed the course are in this group here. All right. So we interact in there. We post charts there. We discuss entries, stop losses, and exit levels. We do all the high time frame analysis from the monthly to the weekly for each and every chart. So that's what we do. All right, so just in terms of the course, also, I don't want to waste time. I think I've already taken about 5 minutes of this video. So the course, if you're interested in joining my course, it will be starting on the 4th of December. That is the last course of the year, from the 4th of December. All right, so you can send me an email. My email will be on my YouTube channel. All right, so that's where you can find me. You can follow me on TradingView there. All right, so that's it. Let's get to the important business of the night. All right, so this is the chart that I posted during the week on TradingView. If you guys have been following me for a while, you know that I have been looking for the breakout of this wave 5 for the longest time. I think for about 2 weeks. Since September, I've been analyzing this correction, anticipating where it's going to end. So even when we were just up here, when we were down here, we were looking for a breakout. So any move that looked like it was going up, like for example here, we looked like we were going up and we were going to get a correction here for a move to the upside. I actually said here there is a possibility that we'll go down here to complete this 1, 2, 3 waves over there before we break out. And you can see here now we've actually broken out last week. All right, so if you can just play both this analysis here, you can see here this was the analysis. Right, so this analysis was not only done when we were still here. I actually posted this before the breakout here, just before the breakout, and all along here we've been analyzing inside here. So you can see here it has played out perfectly as we have analyzed. So if you've been following this video, these webinars for the last couple of days, then you should be in a good couple of pips profit. Right, so you can see that's correlation. Wave 3 on the Euro US dollar, wave 3 on DXY, and wave 4 on the DXY, wave 4 on the Euro US dollar. All right, so you can see wave 4 is pulling back on Euro US dollar. We are about to go, we're actually on our way to wave 5. Right, so we've got a projected wave, a target for wave 5 on Euro US dollar, and a projected target for wave 5 on the DXY. So you can see in the next couple of days sessions, the DXY or the dollar index looks to be weak. Right, so the euro is in strength at the moment. Okay, so let's just have a look at how we looked at this market and how we anticipated all of this. So I'm going to switch off here and just go higher time frame, maybe daily here, show the full count on this string. Remember, this is not the whole count, it's just the count on the one string. So just to show you what I mean by that, you can see here that, okay, I always say that don't let all this cluttering with the analysis confuse you. So what I'm trying to show you here is that this chart is not only labeled on that string that I'm looking at. I only look at the last string for the purpose of this webinar. Otherwise, you can see here the cycles, the whole cycle from the monthly time frame. From the monthly time frame has been analyzed. Same. So not only this swing that we're focusing on. So I just focus on this because we cannot do all of this in just our webinar. We have to go through about 15 to 20 charts. All right, so let's look at this swing. We are looking at this swing here. Right, so most people, the mistake that most people make is this one here. To just come here and label this, as you can see here, there's an apparent looking 1, 2, 3, 4. You may be lucky and get it right. So how do you know that this is even a 5? Okay, so you cannot just come there and label 1, 2, 3, 4, 5 without knowing, as I was just showing you now. If you didn't know what was going on before here, you'll just come here and label 1, 2, 3, 4, 5 and think that you're getting A, B, C, and then you're going all the way down. All right, so if you do not understand what is going on with the whole cycle, then you will not be able to understand or to trade properly. Okay. All right, so I see somebody saying they cannot see what I'm drawing on the chart. Let me just see. Is there anybody can you see what I'm drawing on the chart? Okay, so if you cannot see, if somebody can just log on to my YouTube channel and check if there's anything on there. Because I can see on YouTube it's showing. If somebody can log on to YouTube and see if they can see anything. Is there anything on YouTube? Somebody please log on to YouTube quickly. I'm going to post the recording on this side. Okay, so guys, apparently YouTube is fine, so you can go on there. The only challenge is that you may not be able to ask me questions on YouTube. All right, so if YouTube is fine, you guys can just type the questions here. Maybe watch it on YouTube and then maybe just type the questions here. I don't know why the screen is frozen on this side. But otherwise, then if YouTube is fine, then that's the video that will be uploaded anyway. Okay, great stuff. So let's carry on. All right, so this is what I'm looking at here. This is what I'm looking at. Let me get my annotations there. We are looking at this 1, 2, 3, 4, 5 over there. The yellow one. Just look at the yellow one. Focus on the yellow. If you can just focus on the yellow, I'm going to take off all this clutter. Just want to show you the 1, 2, 3, 4, 5 in yellow first. 1, 2, 3, 4, 5. That's what we're looking for now. All right. So internally on that, you can see that we've got 1, 2, 3, 4, and then 5 over there. Okay, just switch off all of this so it can be clear. All right, so just wanted to show that. So now we've got a clear 1, 2, 3, 4, 5 in yellow that is not completed. But why is it not a 1, 2, 3? Why is it not a 1, 2, and then 3, 4, 5, and then we're going for A, B, C? It's because we apply specific rules. That's how we know. We apply specific rules to know what is going on with this. With the count. So that's how we look at. So 1, 2, 3 over there, 4 over there, and then 5 is wave. Also, there's also an internal wave count in here as well. Obviously, this is the highest degree, 1, 2, 3, 4, 5. Second degree is the red one. That's 1, 2, 3, 4, 5. So why didn't I put the 3 over there as well? There's a specific reason for that as well. All right, so here internally, you can see there's a clear count here, 1, 2, 3, 4, 5. Okay, and you can see in this degree now, in this green degree, you can see that I've got 3 waves here. That is correcting the green. It is in this degree. So degree is size and personality. Okay, we call this one WXY. Right, and I've been anticipating the end of this correction for the last 2 months. Almost 6 weeks for the last 2 weeks. I kept saying that once we break out of this, then we're done. We needed to break out of this, and you can see that we broke out and we corrected. All right, so let's just go to the chart itself and take off the zoom annotation. All right, so just focus on this swing and how the breakout happened. All right. So now I'm just going to focus at the last end. So also, you see, you cannot just come here to the last end and put in a double XY without knowing what's going on. What will that mean to you? It should mean something, right? It should mean something. So here's how we looked at this one. I've switched this one off. So if you remember now, just remember that this is now your wave 3 in yellow. Let me just put it on for the sake of clarity. Right, so this was your wave 3 in yellow, and there was a 5 in red here, so 4 here. It's actually very easy to label it after it has happened, but before that, it was very complicated. Right. So how did we look at this? It was simple, like this. So we had 1, 2, 3 waves here. 1, 2, 3 waves. And in between there, we had a correction. Not like that. Just correct it. Correct those 3 waves over there. We had 1, 2, and in between was a big correction. 1, 2, 3. After that, we had another. I even showed this correction before we started here, because when you understand the count, then you understand when next to take the trade. So here we had 1, 2, 3, 4, 5. Okay, seven string sequence over there. Okay, it's not an impulsive 1, 2, 3, 4, 5. It was a 7 string sequence. So in between these two, here 1, 2, 3. We call that one as a W. This one interconnector. Actually, I should use a different color so I don't confuse you, so you can see which degree I'm looking at. Degrees are very important. If you do not understand the difference between the degrees, you will not trade correctly. WXY over there. You see, so when this was completed, the only thing that would happen here was for this to move to the upside or give us another XZ, right? So it confirmed to us when it broke out that we are not going to get a XZ here. Okay, we broke out. Here's the impulse. We corrected. When this correction happened here, if you go to trading view and check all the euro US dollar posts that are sent, I posted before we broke out here. I posted this that before we formed the flag that we needed to make a flag. It formed, and then it broke out. Okay, now we're riding it along. Right, so you can see here 1, 2, 3 waves. W 1, 2, 3 connector. 7 string sequence over there. So the 11 string sequence over there, which is a Y, and then we're ready to go. It's exactly the same thing that is happening on the DXY as well. Right, so euro is quite strong. First target is here. Obviously, you cannot go and rush in and take this trade because you do not have a new sell set up here, a buy set up over here. All right, so you need to wait for pullbacks. Okay, so let me go to the 1 hour time frame and show you how now I'm going to focus on this string. So you saw how I keep downgrading the time frame. I keep downgrading the time frame to the latest string. So now we're on the 1 hour time frame. Look at how clear this labeling is. It's a clear 1, 2, 3, 4, 5, giving us a 1 in this degree over here. We had that correction that we were waited for to form outside the channel. It happened. So there are a number of things that you could have done here. You could have taken this trade here as soon as you got this impulse. So even if this impulse were not so clear, you could have missed it here. It would not have mattered. Okay, so some would have entered here and be taken out for break even. So here was not a safe place to actually take a trade. You needed a bigger correction after the bigger impulse. So you got the bigger impulse. Now what was left was to get an entry point. And there were a number of entry points on this thing. All right, so if you followed on trading, you would have gotten this trade. So there were a number of entry points on this trade. So this is how you would have traded this one. There was this impulse here, and then the correction over here. You see here, correction 1, 2, 3, right? You could have taken this trade from here, put a stop loss over here, right? So here was another correction. You could have taken it here as well, right? So here it looked like it was making sort of an ending diagonal, but then it did this over here. So you could have taken it here as well. So those of us who took it right at the bottom were running risk-free here with our stop loss over here. So we have already saved some profits on this pair. So this is how you benefit from the Elliott wave theory. All right, so for now, what you're going to need to wait for is to keep getting these flags. We are now in wave 3. We are now in wave 3, and any news that comes out now will be positive for the US dollar because the news always follows the trend. All right, so we are on wave 3 now, only the red wave 3. So we still have to complete, if I clear all this, so we still have to complete a 4 and a 5, right? So just, these are not the actual targets here. These are all exaggerated. There are specific targets for this one. But for now, that's where we're going. So every time you get flags like this, and you can see here, we're starting to correct again here. When you get corrections like that, keep buying it. because we are now in wave 3, and wave 3 is the longest wave. All right, so that is Euro US dollar. Quite interesting. All right, so next one, another pair that I've posted. So I want to start by focusing on the ones that I've posted out on TradingView. Let's look at US dollar JPY. It's got a very interesting setup. I'm going to start this one from the daily, because this one, like most pairs, we've been following it for months and expecting their setups. All right, so let me just get these here. So as you can see here, we had this impulsive move to the upside. Actually get this actually sounding like a broken record now, because I do this every week. 1, 2, 3 correction, right? And then you get a connector that is in the same direction as the trend. 1, 2, 3, okay. And then you get 1, 2. This is what we expected. We expected something similar to this, expected something to that. It did not happen like that, but that did not mean that the structure of the correction has changed. So what do we have there? If we just put on the labelings, so you've got an impulse, you've got a 1, 2, 3 wave correction. 3 waves is W. Okay, 3 waves is W. YouTube is still fine, right? WX, right? Y. So what was that Y? Y would have been this one here. Let's get a straight line. Y would have been this zigzag here. But what happened where I was here, instead of getting a zigzag as we had anticipated, remember you can get any corrective structure. We got this one to come and break the top here, and now it is coming down. Why is it coming? What is it coming to complete? It can either be a regular flat. It will be a regular flat because it has just touched here. So our first target will be expecting it around here. But then how do you enter? We already took this trade here. We already took this trade. I'm going to show you how when we go to the lower time frame where we took the trade. So now you've got a zigzag here. You've got a regular flat in between, which is a connector. And now you're getting another regular flat. Remember, on a WXY, if you watch my video on WXY, I can't remember the date. If you check on YouTube, or if you Google on my videos on YouTube, you'll find a video that I did on how to trade the WXY. This one confirms exactly to how we analyze that. So you've got a 1, 2, 3, which is a WX, and then a Y. We're getting a regular flat here. Okay, so we're on the way, going all the way down. But as you can see here, the market does not move in a straight line. Doesn't move in a straight line. So what you could have here, and as I've been anticipating all along, I'm anticipating that at some point we may get a deeper correction over here. All right, so let me just show it with a different color. Let's show it with the blue color to show that this will be in a different degree. If I'm getting something like a corrective structure within this here, it does not have to be this structure. It can be any structure. It can be another regular flat and expanding flat in here. Okay, something like this here. Again, but I don't anticipate this pattern. I'm not anticipating this one. So I'm more inclined to a zigzag, but it doesn't matter. Any pullback that I get, just redo that. Any pullback that I get on there, it will be a trade. Any pullback that we get here, it will be a trade. So let's go to the 4-hour time frame and focus on this swing over here. Okay, so we've been tracking this swing all the way going up, and I showed here last week that if you understand the patterns, you will know when to enter and when not to enter. So if you look here, we had fractals here. We had this pattern here, which was an expanding flat here. So when this was going down, some were selling this all the way down, going down, thinking that now it has broken this trend line, thinking it has broken the trend line, and now we're going down, right? So what does it do? It goes up. Why? Because what it was doing here was only a flat correction, which is a expanding flat. It was only doing an expanding flat. So if you knew that it is an expanding flat, you would have known that this was not going down. But look, another clue that it gives us, it doesn't do it only once. It does it again twice. It makes an impulse here, similar to the way it made an impulse here. So we knew here that it was, and then it did it again, and we were not going to be fooled twice. Look at this here. Is this a move going down? When this was going down, I was saying buy. We were buying in our group. We were buying Euro US dollar JPY. Okay? Because we know when the corrections form, how they interlink. Look at this one here. 1, 2, 3. Clear expanding flat. And then when we finally broke for the last time to the upside, and then it started making a move to the downside. So when it started making this move to the downside, we were not selling as yet. So this move here. So when it made that move and made a clear corrective structure here, I always say a flag, but this is a corrective structure. 1, 2, 3, 1, 2, 3 waves here. When it did this, we were selling here. I actually posted this one a trading view. So we sold this one over here. So we are already in profit with these many pips. So every time it corrected, I kept posting. So you can see here the post ascend on trading view. This is a clear structure. So let's just see if we can find that chart. US dollar JPY. See if I can find it quickly. There we go. So if you're on trading view and you're following me, and if I post a chart, what I do is I keep posting updates on that specific chart. So you can see here, this was that area where I was explaining that this is where we sold. This is where we sold. This was a free trade for everyone. Posted this on trading view. So here you can see that I'm anticipating that deeper correction. It does not have to be a zigzag. It can be anything. So this is how this trade went. You can see here it broke. We were already in the trade. It made a corrective flag, which we sold as well. Again, if you had missed it here, you would have gotten a second chance here. Look what it did. It breaks again, and I post again that it's breaking again. Okay, it does a bigger one. I post again that was making a new one. Okay, it kept making these flags, and I kept posting that we kept on selling until we get this deep correction. Okay, so now here I said we're going to get a pullback, which did not happen here. So what happened here with this pullback? It corrected deeper. It corrected deeper before it broke to the upside. Okay, so we anticipate all these moves now. So you'll see that US dollar JPY has corrected to the upside. Right, so we are now getting this move here. This is the deep move that I'm anticipating. It may not be as deep as this. Let me just clear all that so it can be clear, so the chat can be clear over there. It may not be as deep as I'm anticipating over there, but this is a very clear sell setup over here. Next week, we'll be selling this again. So the deeper this is, the better. We want it to be as deep as possible. Because a correction is I call it a loading gun. It's basically just loading for more. We already got these pips to the downside, and now it's loading for more. But you cannot just go here and sell. Wait for this to break to the downside. Okay, that's the trade for next week. To wait for this to break to the downside is making a nice corrective structure over there. All right, so that's the trade for next week's. So those who took it right at the top should move their stop loss above here, and when this breaks to the downside, we're moving the stop just above the flag here, and then we're running risk-free with profits protected. That's how easy trading can be. Okay, let's look at which other one was posted. Let me just go through them in a straight line now. So we've done euro US dollar. Let's just do all the US dollar pairs now. So let's look at New Zealand US dollar. Okay, I also posted on this one on trading view as well. Right, so this is the 4 hour. Let's go to the daily here quickly. I might even need to go to the weekly and show what I have been saying for over 3 months on this pair. So here you get a impulsive move to the downside. That's your impulse, and you're getting a correction over there. Let's do the correction in red. So this is the correction that we've been getting here. So I was anticipating that we're going to get something like 1, 2, 3, 3, like that. As always, the market does not move in a straight line like that, and we just make adjustments when there are changes. So instead of getting this as the whole correction here, it looks like this, because we wanted this to be the whole correction here, and then we go like that. But actually this looks like the correction there before we get this move to the upside. See, and that will still be an ABC. So in between here, you've got what looks like a regular flat. Regular flat. You can see here it's turning exactly here. Okay, so that will be a very nice WX. So if this starts playing out now, WX to the upside. Okay, so that's how we're looking at this. So we were anticipating reversal on this swing. So let's see if we've got any clues of reversal over there. Right, so let's have a look over there. So this is what we're looking at now. This is a daily chart. Let me put up my MACD over there. Not that, the indicator. I'm going to put up my MACD. Okay. All right, let's pull this down over there. All right, so we're looking for reversal on this swing. And you can see here we're getting divergence in making the price is making lower lows, but the indicator is making higher highs. So the only way to trade this one is we're taking it aggressively. We got stopped out, but that's part of trading. It's not a stress. It's nothing to stress about. So you need this to break out of this first. It has to break out of this to confirm. And not only just break out, because it can break out and go back inside. It needs to break out and correct like this for us to now start thinking that we are now bullish New Zealand. Okay, we're still on the daily chart here. Let's go to the 4-hour. See if there's any kind of indication that we may be going up as well. 4-hour. So you see what I do is I get the direction in the higher time frame, lower time frame for a trade. Okay, so now look at this here. We've got an impulse to the upside, similar to what we have on the Euro US dollar. So this is more confirmation that the dollar is going to be weak in the next sessions. So we're forming this corrective structure here. When it breaks, we're going to be going to the upside. Or those who are asking about the screen, you can go watch it on YouTube. Apparently, the screen is broken here on Zoom. It's frozen on Zoom. So watch it on YouTube. We're live on YouTube. All right. So we're anticipating this move to the upside. And if that goes on, we're going to be going up for quite some time on New Zealand US dollar. So that's another trade for next week as well. That's currently forming. So remember, this does not have to do this. It can form deeply, but although I prefer this not to only correct only up to about 50%, then that will give this trade more probability of going to the upside. So that's what we're looking at. Okay, so that's New Zealand. So we've got a couple of setups loading here now. That's one of the setups that is loading now currently. So corrective structure. All right, so we're getting that corrective structure over there. That's the 1 hour. Okay. So you must just be careful not to just buy before the breakout, because it has done it before. I'll show you where I posted the trade. I think I posted when it was doing this here. I posted that we need to see a breakout here. When we had this, where was that? Let me just open the trade. I think we posted it a bit prematurely before it started. Let me look for New Zealand US dollar. Let me try to find New Zealand so you can see what I mean by why it is important to only take the trade after it is confirmed. Okay, see this one here. When we had the impulse and this was going down, You see here, this looked like it was going up, going down correctively. We had the impulse and this correction here, right? So this one had not played out at this specific point, but it does not mean the trade setup is wrong. See here, we still got another. So if you did not break up properly, you do not take the trade. So here you've got an impulse correction here. You could be getting another correction here. So you need to wait for it to break out completely. All right. So here there was a buy setup, which has taken us out. All right. But that's not a problem. It's part of trading, because you know when you get a trade, when the trade start playing out, you're going to be going up for many pips to the upside. So let's look at this one like that. Okay. Only a clear breakout can be taken. So that's New Zealand, US dollar chief. Before we go to chief, let's do CAD. It's one of the trades that are posted as well. If you've been following, here's the CAD. It's recent. I think I posted this one on Friday. Here is the US dollar CAD. See here the trade, blue box magic. Those who've attended the course know what I mean by the blue box magic. Every time the price comes to this blue box that we projected, it always reverses. So we projected the blue box. It wasn't going to move any further up. It was just going to turn there. So you see that it has reversed there. So what you'll be looking for here is this corrective flag to go down. So you may be late if you did not take it right at the top here. All right. So what you need to do is maybe leave this trade. But if you're an aggressive trader, you can buy this corrective structure here and anticipate a move to the downside. But what could possibly happen here is that this can also do this and come and take there before you go down as well again. Okay. So if you like, you can take your profits and see what if this and sell this correction again, or you can just hold it. But if you hold it, you may be taken out with this before you move down, because you don't know how far this correction is going to go, because that's a clear 1, 2, 3, 1, 2, 3, 1, 2, 3. It can be anything. This can be a regular, expanding, or running flat, or triangle, whatever. Okay, so that's what you'll be looking at on US dollar CAD in the next coming sessions. All right, so let's look at this one. That's the 1 hour time frame. You can see it has already broken to the downside. Looks like we're making another flag over there. So you can focus specifically on this flag on the 1 hour time frame. See if we go down to that target. Okay, easy like that. Right, so somebody sent me on Telegram. They were busy looking at the videos that we did over 3 months ago, and they reminded me of what I did with this US dollar chief pair about 3 months ago. So let me just show you what we were looking at before this move that is currently happening. Let me go to the weekly chart. So you see, when you look at this chart, when you look at what I'm doing here, putting up the annotations and the labelings there, it looks very easy until you go to the chart on your own. So you need to get the training or as much time as possible with the charts. So this is what I did about 3 months ago in one of the webinars. He said we've got this impulse move to the downside here, and now it is being corrected with this over there. All right, so this is how I looked at it. And I said this looks to me like a leading diagonal. And you can see here there was a news spike, right? There was a chief spike in 2015, if some of you were trading then. Right, so we had this chief spike. If you look at all the chief pairs, you'll see this spike around 2015. Okay, so I'm not going to go through what was happening then, but some of us were already trading then. 1, 2, 3, 4. Okay, get a straight line over there. Okay, 1. Not like that. Let's get my pen out over there. Let's just clear over there. Give me a second. Just drew it incorrectly. Right. So that's what we have over there. So you've got here an impulsive move to the downside. You've got a diagonal over there. So inside here, you've got 1, 1, 2, 3 waves inside over there. Let's just do that and put on the lid. Let's take it off. Let's put up the labeling. All right, so that's 1, 2, 3. We're anticipating a 4 to the downside over there before a move to wave 5. Okay. Right, so this looks like a leading diagonal with 3 waves in between. As you can see here, we've got 1, 2, 3. Right, that's 1. We've got a correction here. If you go to the lower time frame, obviously this happened in just a few days, just about 2-3 days. If you look at the lower time frame, you see that you've got a 3-wave pullback on this. So that's your 2, that's your 3, that's your 4. That's currently the 4 that is currently happening as 1, 2, 3 waves on wave 4. So your wave 3 also is still 3 waves as well. As you can see over there, 1, 2, 3 waves over there. All right. So what are we anticipating? We're anticipating this move to wave 4. That's why I'm going to go and focus on right now. Okay, so I'm going to clear everything. So you just remember when I clear on here, this is your wave 3 and this is your wave 4. So I want to focus on this side. Okay, so this is the focus right now from 3 going to 4. So this was done over 3 months ago. This focus was done over 3 months ago. Okay, so when this was going up, this was never going to be a buy for us. We're looking for the move to the downside. All right, so I'm going to go to the 4 hour. So this is behaving similar to US dollar JPY. As you can see here, started moving down, started giving sell setups, Okay, so similar. Remember, we are now going to wave 4 here. This is the last bit of wave 4. The last bit of wave 4. And what I was looking at was the weekly chart. So there's still a whole lot of pips to the downside. If I clear all this now, let's clear. So this is a wave 3 over there. Just so you can see, wave 3. And we are going for 4 over there. So now this is basically an ABC for this to come and complete now. Okay, so it will not go in a straight line, as I always say. So what you will need is to get another. This one is too thick now. Undo that. Let's clear all. Okay. You will need to get another deeper correction here. There's no new trade here, similar to US dollar JPY. You can't take a new trade. Actually, US dollar JPY is setting up nicely, but you would anticipate that you get something similar on US dollar Chief, something similar like this before a move down all the way over there. Okay, for some time, we're still going to be down on the US dollar Chief. Right, so we've done New Zealand. All right, so let's do US dollar ZAR as well. US dollar ZAR, let's go to the daily. All right, so I've done this one almost every webinar that I've done. So go watch the higher time frame on the previous videos. I'm just going to focus on this thing. We don't have time to go through all the higher time frame for all the videos here. Okay, I think my team and I are already on the long trade on this one. All right, so this was coming down like this. This was a correction that was coming down like this. You can just show it like that. So you can see, it's clear over there. You can see this was all this correction coming down. 1, 2, 3, 1, 2, 3, or the opposite direction, a connector, and then the last part of this correction. And from there, we started this impulsive move to the upside. which we have now labeled like this. Right, so this now looks like a 1, 1, 2, 3, which is a zigzag, it's a 2, but then it makes another impulse, which is now lower degree. Now we call that one a 1, a 2, and then this one made a 3 over there. All right, so remember when we were still here and I said this thing is not done yet, it needed to go to at least 1450 for it to be a valid impulsive wave count, and it actually did, and now we could actually then put in a 3 there. Before it got to 1450, that was not going to be a valid wave count because it did not conform to the rules. Okay, so now let me just mark these corrections. This was the first one here. Over there, you can see. And then you've got the second one over there. We can put it in pink. This is now lower degree. Yeah. And you can see this one is a regular flat. This one is almost like a zigzag because even though it pulled back as close to the impulse, it did not pull back to about 90, regular flat to pull about 90%. And that's not a rule, it's a guideline. Remember, there are rules, there are guidelines. So 1, 2, 3 has completed. What are we anticipating now if 1, 2, 3 has completed? We anticipate that we're going to have a 4. What degree will that be? It should be a red 4. We're anticipating a red 4. Okay. How will this red 4, what corrective structure will form in there? That's the only thing we don't know. But what we know is that we're going to have a corrective structure in between here in wave 4 before we go complete the wave 3. Only wave 3. Okay, only wave 3 in yellow. So we still long-term bullish US dollar against the ZAR here. So even though this correction is going to take time here, it doesn't mean that we do not trade. So while we are anticipating the big move to the upside, we'll be trading here inside here. So let me show the trade that we took here last Friday. Okay, so that's when this was going down. We're not really interested in the sell because we can see that the sequence is up, the cycle is still up, it's nowhere close to ending. Okay, so we're gonna keep buying US dollar ZAR. So rand is gonna be weak against the ZAR. So I'm gonna clear here and put up the actual labelings here. Right, so you can see here. So this full forecast, I think if I can just quickly go to a group, we'll see some pictures over there. Just want to see if I've got that full forecast on US dollar ZAR. Let me see if I can find it. Not over there, not over there, not over there. US dollar ZAR, when did we do that one? Okay, I can't find it now. I'll post it, but anyway, I can always just show it here. You can see here the forecast here, what I'm looking at. I just wanted to show that we forecast it before it happens. So you see, that's what I'm anticipating over there. This was the first 1, 2. Remember this here, this 3 is only completing. The 3 is only completing the red 4. We still have to complete the yellow wave 3. So we still have a long way to go here. Right? So it doesn't matter what corrective structure we're going to form here. Otherwise, after that, we're going up to wave 5 to complete that one. And then we're going to get a deeper wave 4 over there before we get this wave 5. So long-term US dollars are it's going to be bullish. Okay. Right. So now let's look onto the 4-hour time frame to see how we trade within the correction. So we know that this is not going to go all the way down. So when it has reversed over there, the only thing we wait for is for it to reverse. Okay. We wait for it to reverse. And as it looks now, it has already reversed. And now we're just going to be trading up at least to that level over there because we know that these may just do a 1, 2, 3 before it goes. Okay, can be any corrective structure, but for now we're just going to wait for a corrective flag before we go. Right, so US dollar ZAR already took this one. Right, so we just see when we took that. The live mentorship one. I think this was yesterday on Friday. Friday. There we go. You see there, as soon as it broke, as soon as we broke over there, we took the trade. Said we wait for a corrective structure. Wait for a corrective structure. When this we then take the trade, all of us in our group. All right. So let's go back. So that's easy like that. Now we just need to trade within this correction until it ends. Same thing that we were doing with the euro US dollar. See here, we corrected here, went up to here. We may expect a reversal. We'll be trading it down as well, but it's risky to trade it down. So maybe we can just leave it and then wait for this big move to the upside, which we're going to hold for the longest time. All right. I think that's all US dollar pairs. Now let's do the yen pairs, euro JPY. Now we do all the euro pairs, the yen pairs. Okay. So this US dollar JPY may not be going down as we've been anticipating. I actually posted this one and said this one was going to go down, but it looks like it is now making a corrective structure over there, which we just need to understand. Undo over there, undo. We just need to understand the corrective structure that it is currently making over there, because what we're seeing there is something like this, with a straight line, something like this, 1, 2, 3. Okay, that's a regular flat, right? But now it looks like it's making another one. We don't know if it's going to make another double. You can see that's the connector over there. And then this now looks like it may do something like this. If this is our connector, it may do something like this, come break, come down before it goes up. Okay, and that would be 1, 2, 3 connector, 1, 2, 3 regular flat before we move. All right, you see that could be what it is forming, but for now we wait and see what it does. Okay, but we did trade this pullback because it gave us a setup. We traded this pullback, as you can see here. I think if you go on trading view on my post, I've posted this reversal over here. I just want to show here. So that's regular flat, connector, regular flat. Okay, so this is the possibility. So it may come here and touch here and come down again before it moves all the way to the upside. Okay, so it looks like the sequence is incomplete over there. All right, so that's how we'll be looking at this one. So here's why you should not take trades without the clear breakout. It's a good example of that. I posted this one after we had that impulse. I posted and I said we're going to get a pullback here before this formed. I think this flag was only up to here. So if you had decided to buy here, this was going to keep going down. And when you think that it's going down, then it actually goes to the direction that you're looking for. So this is why it is important to buy, to take a trade that is fully confirmed. All right, so that was another entry opportunity if you had missed taking it over here on the bigger drop, on the bigger flag or bigger correction. So you could have taken it here as well. So it is important to take it once it is confirmed. No need to rush. Okay. That's Euro JPY, Chief JPY. This one, posted it. Free setup, posted it here. Okay. Then we posted the pullback as well. So what we'll be anticipating here, the sequence is still down. So what you may get here on this one is for this to keep crawling over there, right? Give us that move over there. And that will be giving us this corrective structure there, over there, 1, 2, 3. Okay, so let's watch how this one develops. We'll watch what it does over there. But then if it starts breaking out of this here, if it starts breaking out of this structure here, then we're going to start looking at it differently, right? So that's the channel that we're going to be looking at on Chief JPY. But for now, we took it over there. You can follow this one on TradingView. I'll send updates on it as well. That's Chief Audi JPY. So Audi JPY has broken the long-term trend line over there. All right, so let's just look what is going on over there. Switch this off. And if you can see over there, just want to focus on this last swing over here. So you've got a 1, 2, 3, 4, 5. We're getting an A, B, C to the downside, and that A, B, C does not look to be completed. You can see we are forming a corrective structure at the bottom. This is how the corrective structure looks like. It's crawling up here. We'll see what it does when it gets to that level. Maybe we keep selling again. As you can see, we are selling the US dollar JPY. Right, so the yen pairs, what they're doing now is only pullbacks. So whenever they complete these patterns, we're gonna take it to the downside as well again. Okay, that's Audi JPY, CAD JPY. Okay, look at this one over here. Let's take this off. So you can see here we've got a 1. This actually should be here. No, over here. That's fine. 1, 2, 3, 4, 5. We're getting a double correction here. So I'm anticipating that this will form like this. You've got an impulse. Now you're getting a 1 over there, which is 1, 2, 3 waves, which is a W over there. And then I'm anticipating that we're going to get a connector like that over there. And that connector will be giving us this something